Hey guys, the stock market was up huge today. The Dow was up big. I was up big, almost $200 in one day. Just an overall great day for the stock market. But today we will not be talking about how great my portfolio returns were. We won't even be going over the ups and downs. Instead, today we will be talking about all of the dividends I received in the month of July. I know these are always one of the more popular videos that viewers want to see, so I thought I would show you guys. As always, guys, if you guys like this content, please be sure to help a small-time YouTuber like me by hitting that subscribe button and liking this video. So my dividends, I didn't do this on purpose, but the way that they're paid out is I get the bulk of my dividends in the June, September, December, March stagnation. The other months of the year, I don't receive as many. Again, I did not do this on purpose. It just so happens a lot of the companies I pay that I buy shares into, they pay out dividends all in the same quarter or in the same month. So that, it doesn't really matter to me. I don't really care when I get paid as long as the money is flowing in. And it's great motivation when you see the dividends that you receive every year just basically going up. This is now year 2 for me in the stock market, and I'm already seeing huge gains here. Get into the portfolio in terms of what dividends we received. So to start off with here, I have Coca-Cola. I own one share, and for every share I own, they pay out 40 cents per quarter. So that's not too great, but Coca-Cola has been around for such a long time, over 100 years. It's a dividend king, 50 plus straight years of dividends paid and increasing those dividends, guys. This is definitely one of the cornerstones of dividend investing right here. And Coca-Cola, it had a great earnings report this past quarter. The stock shot up 6% in just one day, which is phenomenal for a company that has been producing basically the same product for over 100 years. So Coca-Cola there, one share, 40 cents. And then we move up to Iron Mountain, 61 cents per a share. I only own one as well. Now, dividends are only good as long as you are not losing that capital appreciation as well. And unfortunately, Iron Mountain has been skewing into the wrong direction. It pays close to an 8% dividend, but it's also been down quite considerably here in the last couple of months. But I guess you never really lose money until you sell a stock. So I will be continuing to hold on to this one share of Iron Mountain until I am content with how it's going to continue to do in the future and if I'm going to be gaining or losing money on it. Then we have FedEx, again, another stock I only own one share of, pays 65 cents per a share. FedEx recently announced that it wasn't really doing any more business with Amazon because it sees it as a main competitor. We'll see how it continues to raise its dividend in the future. Then we have Medical Properties Trust here. I may own 5 shares, but shares of this stock are extremely cheap. So I really own less than even $100 of equity into this company. That's why I'm thinking of adding even more. It pays out 25 cents per share. This is a real estate investment trust. Basically, it leases out the space that hospitals do business on. So Medical Properties Trust there, 5 shares, 125. Then the next one we have is Chubb Insurance, a relatively new position in my portfolio. Only pays out 75 cents per quarter. Not too bad there. Again, a lot of these stocks right now I only own one share, but as time continues to go on, I will continue to dollar cost average into these positions. And then we have Realty Income here, not Reality. Always have to make sure I'm saying it right. Then we have, it pays out 22 cents per a share, close to 23 cents now, and I get 45 cents because I own 2 shares of them. This is a stock that has really capitally appreciated a lot in the last year. So I've made huge returns not only in dividends, but also in capital appreciation. And this is a monthly payer, so that's always nice to have in your portfolio as well. Then we have Store Capital. This is another REIT. 5 shares, and each share pays out 33 cents for a total of $1.65. So I actually think I'm up on almost all of my REITs except for Iron Mountain. So REIT sector has been looking really hot this year. Then we have Disney. Now, unlike most stocks, Disney only pays out dividends twice a year. So July happened to be one of them. I actually own 3 shares now, but at the time that this was, that their ex-dividend date was, I only had 2 shares. So next time I'll get it for owning 3 shares, but for now, the 2 shares that I owned gives me a total of $1.76. And Disney, guys, basically a monopoly almost in the media sector of business. Then we have stock I never really talk about much. It's called New Residential Investment, NRZ. You guys probably seen this on Robinhood's top REITs little category that they have here. This is a very high risk, high reward stock. Has a dividend over 12%. So it's always, it's not a stock that I can go to sleep while knowing that I own this. I've seen people have hundreds of these in their portfolio. And while it might be doing really good right now in a bull market, we don't know how it's going to perform in a bear market. So that's the reason why I don't own too many shares of this, but it pays a ridiculously crazy amount of dividend. Who knows, maybe in the future, if I'm feeling more riskier, I might invest more into this. Then we have BlackRock Science Technology. This is a ETF that owns a lot of Amazon. One of the few ETFs I actually own. Got into this really early in my investing days, but it also pays out monthly dividends, 15 cents a share. And then we have my other ETF that pays out monthly, the PowerShares S&P 500 high dividend, low volatility ETF. Pays out 15 cents per a month for every share that you own. So I own 3 shares, 15 cents, that is 45 cents total. So then we also have JP Morgan Chase. Has been known to increase its dividend quite substantially. Last year it went from 56 cents to 80 cents a share. I own 3 shares, $2.40 altogether there. So those are going to be it for the dividends I received in the month of July. If you want to know how much I made in July 2018, that was a whole $3.32. And then in July of 2019, I made $13.17. So that's a 296% increase. So obviously, as I continue to progress and make more money, that type of growth is not going to be substantial or sustainable. But every year, not only will the companies be increasing their dividend paid, most likely, but I'll also be channeling in more money, reinvesting these dividends into buying more shares, and that's going to equal even more dividend payments coming my way. So that's really the beauty of dividend growth investing. It really keeps you motivated once you actually see money coming in every month. And yeah, like I said, guys, the bulk of my dividends comes in. The next time it'll come in is during the month of September. So be sure to keep tuning in to the channel, and let me know what you guys think in the comments.